Is the US dollar dying? Trump is back in the White House. Global markets are reacting, and countries once loyal to the dollar are cutting ties. But what does all this mean for your money in 2025? The truth is unsettling, and it's already impacting your future. Let's break it down. For nearly 80 years, the US dollar ruled the financial world. It wasn't just a currency, it was the currency. It backed oil trades, dominated international lending, and served as the world's reserve standard. From Wall Street to Shanghai, deals were done in dollars, but not anymore. Today, the dollar is under attack from outside and within. China and Russia now trade in yuan and rubles, bypassing the dollar completely. Saudi Arabia is exploring oil contracts without U.S. currency for the first time in decades. And the BRICS alliance? They're pushing to create a rival, reserve currency to challenge America's dominance. Meanwhile, here at home, the U.S. keeps spending and printing. Since 2020, over $6 trillion has been added to the national debt. That's more than the entire GDP of Japan. Every new dollar weakens the old ones. Inflation is silently eating away at your wealth, even if your bank balance looks the same. With Trump now back in power, his signature policy has returned. Tariffs. High tariffs on Chinese goods. New tariffs on European cars. Even U.S. allies are getting hit. In theory, tariffs protect American jobs. In reality, they raise prices. Imported goods become more expensive. Companies pass those costs on to you, the consumer. Groceries, electronics, gas, everything's going up. And foreign governments? They're retaliating, slapping tariffs on American exports, pulling out of U.S. bonds, reducing dollar reserves. The result? Less global demand for the U.S. dollar. And when demand drops, value follows. Your dollar becomes worth less, not just abroad, but right here at home. This isn't just politics, it's your wallet on the line. Oh, let's get personal for a moment. What does this global financial shift actually mean for the average American? Living in 2025? Let's start with the basics. 1. Prices are rising fast. You've already seen it. Groceries are more expensive. Gas prices bounce like a yo-yo. And that $5 coffee? It's creeping towards $7. It's not just inflation. It's the dollar's purchasing power quietly fading away. 2. Your savings? They're shrinking in silence. That $10,000 sitting in your account isn't safe. If inflation runs at 6% and your savings earn just 1%, you're losing $500 a year without spending a dime. 3. Retirement is becoming riskier. Many retirement portfolios are heavily tied to U.S. stocks, bonds, or the dollar itself. If the dollar drops in value, or global investors move away from U.S. assets, your retirement fund could take a serious hit, even if markets don't crash. 4. Housing affordability is under attack. Interest rates are swinging unpredictably. For first-time buyers, it's harder to get a mortgage. For existing homeowners, refinancing can be a nightmare. And while rates are up, real estate prices haven't dropped much. Why? Because physical assets like housing hold value when currencies falter. That's why the rich are buying land, not hoarding dollars. If the U.S. dollar truly loses its global dominance, we may face an economic shock this country has never experienced. But listen closely. You are not powerless. While the average person panics or sits still, the wealthy are already adapting. Quietly. Strategically. And here's how you can do it too. Step 1. Invest in real assets. Gold, silver, real estate, land. These aren't just old school. They're timeless. They don't rely on government printing or central banks. They hold real tangible value. Step 2. Diversify globally. Look beyond the U.S. market. Buy international. ETFs through platforms like Schwab, Vanguard, or Fidelity. Tickers like VAXIS, SCHF, or emerging market funds give you access to stronger global economies. And yes, crypto counts. Bitcoin and Ethereum aren't just digital coins, they're global, decentralized stores of value. Step 3. Build income in strong currencies. Use your skills online, freelance, sell courses, create digital products. Don't tie your income to one currency. Think globally, act digitally. Step 4. Stop saving, start owning. Cash is not king anymore. Assets are. Invest in businesses. Buy dividend stocks. Start side hustles that pay you month after month. Focus on ownership, not just earnings. Because here's the real secret. Wealth isn't about what you make. It's about what you own. We're living through those signs right now. This is your chance to act before the wave hits. The dollar may not vanish tomorrow, but its power is fading, slowly, surely, and you have a choice. Stand still and watch your wealth melt away, or adapt, act smart, and rise above it.